76% of Americans live paycheck to paycheck. Is that you? I'm the CEO of 5 different companies. I wasn't born into it. We lived on welfare, but I wanted more. I created this show, The School of Wealth, helping people escape poverty like I did. I want to help you out of that consumer debt, teach you how to increase your credit score, teach you how to make more money at your current job or your current business, and then how to actually create generational wealth without changing your lifestyle. It is going to be a lot of fun. This is not like regular school. Hey, I'm Rondi Lambeth, and this is The School of Wealth. Hello, everybody, and welcome to the show. I'm your host, Rondi Lambeth. Today, I have one of my good friends. He is a business profitability specialist. Name is Jake Alexander. Jake, how you doing today, man?
I'm amazing. How are you, Rondi?
I am awesome. I have a question. I know everybody's wanting to know.
Yep.
Are you wearing khakis?
Absolutely.
All right.
That's the only way I fly these days.
Hey, if you are tuning in on Facebook, YouTube, on the live channel, LinkedIn, or any of the other social medias, this is the actual very first broadcast, live broadcast of the School of Wealth. So bear with us. I see there's already 20 people, 21 now participating. We are going to do some Q&A here in a little bit, but this is the first time that we've done the live broadcasting of the show with this new software. So bear with us. If you're listening on the podcast channels, the YouTubes or the iTunes, Spotify, Stitcher, whatever, check out the YouTube channel and Facebook channel and Instagram and all that stuff, because it's pretty cool what we're doing with this software. So what do you think about it, Jake?
This is awesome. This is my first time using it. I actually had a couple different people bring it to my attention and say I needed to check it out, but very impressive so far. Almost as impressive as that fancy setup you got there, man. I gotta step my game up over here. I'm in the new office, so you know.
Hey, today's show is called "Cool Shit You Can Write Off," and this behind me is an example of cool shit you can write off. This is my studio, my laptop, my phones, all this, and then due to COVID, which I find myself saying that a lot lately, due to COVID, I no longer have the studio in Las Vegas, but instead of my 3,000 square foot house, I'm using about 1,500 square feet of my home plus a 3-car garage for my studio and my business. And what does that mean, Jake? Because I'm using my house as a business, what do I get to do?
You get to write it off. So there's all kinds of expenses, that come along with that. And it's just one of those things where you want to take advantage of it if you qualify. Absolutely.
Yeah. So today we're going to talk about cool shit you can write off. I remember a couple weeks ago when we were in Florida and you said that, and I'm like, hey, you need to start a podcast called that, and you need to buy a domain name like right now before I buy it.
And I did, actually. It's coolshitYouCanDeduct.com.
Yeah, that is so cool. All right, Jake, so tell us about yourself. You are a business profitability specialist. What does that mean?
So we help people turn their business into what they really started it for. In layman's terms, I'm an accountant. We do a lot of stuff with numbers and taxes, but we really consult and strategize with business owners to help them turn their business into what they originally started it for. And it came from a need of, we just see too many people, they start their own business because they have a great idea or they're good at something, and then they're 2 to 3 years into it. They're maybe bringing in a lot of revenue, maybe they're bringing in $500-600 grand a year, but the bottom line isn't exactly what they thought it would be. We see people who get in a situation where they're like, they're running this business just to pay other people's paychecks. They're not even really bringing home any money, and it's sad. So we use the numbers as a guideline to put systems and processes in place to help them. If they want to grow to a $10 million per year company, we can do that. If they want to grow it to a $700,000 or $800,000 business that has 1 or 2 employees and has a 50% profit margin, we can show them how to do that too. So we really just help them figure out what it is they want first, and then use the numbers as a guideline on how to get there.
All right. And so you sit down with people and you help them make more money, because let's be honest, the reason we start a business is to make money. I mean, that's really it. And you can say it's for other reasons. Like my company, for example, I started Fortress, was to help people with their credit. And I started doing it for free, but I was doing it to make money on the real estate side. See, I was running these how to buy a home with bad credit seminars, bringing the people in a bad credit, fixing their credit and turning them into a home buyer. And then I was running seminars on how to short sell your home. This was back in 2007, 8, 9, and 10. How to short sell your home without destroying your credit seminars, and then getting listings out of it. And in the end, I started making more money doing credit repair than I was from selling homes. And then I just launched it. I made it even bigger. And then I've continued that business because shortly after that, my little brother at 22 years old shot and killed himself over a little bit of money. And I say a little bit, it wasn't a lot. And there was other reasons, but that was part of it, and it's about 50,000 Americans pre-COVID kill themselves over financial problems and that stem from credit problems, because really you can eliminate almost all money problems if you have proper credit. If you have good credit, you can get low interest loans or no interest loans to fix your money problems. So, I didn't start my company to help people alone. I mean, that wasn't the sole reason. It was to make money. I mean, I'll be honest with you on that. So I'm glad that you brought that up, that you help people make more money.
We help them make a profit. Yeah. I mean, nobody wants to be in a situation where they're working 7 days a week. They're stressed out. They're taking on the accountability of payroll of other people to not make money. I think that, and not that it's everything, right? Because at the end, money doesn't make you happy, but it sure doesn't make you sad, right? And that's what we do. I love your story because that's kind of in a nutshell, we help walk people through that process. And we've seen some amazing transformations where, people start a company with one service or product, and then through working with us over 3 to 6 months, it really transforms into something they never thought it would be, because we show them how to actually turn a profit from it. So yeah, that's a great example right there.
Yeah, I couldn't tell you. I never in my wildest dreams thought I would make millions of dollars helping people fix their credit. And now I'm more of a wealth strategist where I help them with their credit, their debt, building wealth, investments, and have kind of evolved into something other than just credit. But you said something earlier, and you said money can't buy happiness. Did you see that study that was released a couple months ago that said the more money you make, the happier you are?
I didn't. Tell me a little bit about it.
Yeah, they actually did a study proving that people with money are happier than people that don't have money. And what was interesting is they went down to $100,000. So they interviewed people and found that when you make $100,000 or more a year, you're generally happier. And it's not the physical cash that makes you happy by holding this non-tangible object, right? It's what the cash allows you to do. And I know 76% of Americans live paycheck to paycheck. They struggle with money. They go to sleep thinking about money. They wake up thinking about money. They have stress. It's the number one cause of disease and death in America because it all stems with money. And primarily, I think it's because they're not educated. There's only 17 states in the United States that even have any type of financial education, and is basic, right? Most of us don't learn anything. So it was just interesting you said that. So tell me, what is, you've dealt with thousands of people over the years, business owners. What do you see that most of them do wrong when it comes to their taxes or their business?
When it comes to business owners specifically, not classifying different streams of revenue. So we'll see a lot of times, QuickBooks, that line that has fee for service income, 700,000. One of the first things we do is we go in and break down where that comes from. All right, do you have a membership model? Are you selling a product? Is some of that service-based? That's really the first thing we do, is customize their chart of accounts to show them okay, out of all the money you're bringing in, where is it coming from? And then the next step is showing them where they spend their time, in relation to that. So it's amazing. Probably 7 or 8 out of 10 people that we deal with, they're spending the most time on the thing that makes them the least amount of money, and they don't understand why they're not making money at the end of the day. And kind of saying it in jest, but it's amazing. It's, once you tweak that, the arrows start moving in the right direction.
Why is it that you break down where the income comes in from? Is it strictly to show them where they're making their money? So kind of like the Pareto's 80-20 rule, or is there some tax reason that you do that?
Not necessarily a tax reason. To the IRS, a dollar is a dollar. They want their piece of it any way they can get it. It's like you said, the 80-20 rule. So for us being a tax business, I want to know how much revenue comes from 1040 tax returns, how much comes from 1120 tax returns, how much comes from partnerships, how much comes from our monthly packages. And I want to tailor my business and my business model to the ones that are the most profitable. And it's great. It's crazy because people love to make money, right? So in a weird way, we love all of our customers, right? And if we had unlimited time in the world, we would take care of everyone, but we don't. So we found when we're dealing with our customers that pay us the most money, that we're the most profitable on, we're naturally more pleasant. We're willing to help them. It's a win-win situation for everyone. So it really works at a high level.
I actually took notes on that. So I'm going to text my bookkeeper when we get done here.
Look at that.
I want you to break down where the money's coming in, because I think she does a little bit, but I think most of it's service income. And I'm going to break it down.
There you
go.
How
much do I make from my books? How much do I make from my speaking engagements? How much do I make from, because I do a little bit in Infusionsoft from my podcast versus Facebook or Instagram, but I'm going to put that in there. So thank you, Jake.
Absolutely. And it'll be eye-opening too. Once you actually do it, and then you get a few months of a track record, you'll get some really good insight from it.
So what would be something else that when you sit down with a client and you help them, what else would your standard operating procedure?
A big thing is to train them to be proactive, right? Accounting and tax, it's boring in nature. I tried for years to make it sexy and make it fun. I think I might be getting close at this point. It's really just to flip their thinking, to be proactive instead of reactive. We love all our clients, but we really love getting clients who have already bumped their head a few times. They had that first 6-figure year, and then once they got their 1099 said, yeah, shit, now I got to pay taxes, oh, what am I going to do? We love working with those people, because then they're in that second and third phase of, I don't want to just defer taxes and figure out how to clean up the past. I want to proactively plan and make decisions that are going to help me run my business and purchasing assets and stuff like that. But they're strategically, I'm purchasing assets that are going up in value while strategically taking advantage of as many tax deductions as possible. It's having a plan.
Yeah, and what most tax professionals do, including your CPAs, and this is my opinion, not necessarily Jake's, he might agree with you, he might not, is they look at life through the rear view mirror, and they're looking at your books on what happened last year, and they're bean counters, and they're just filing. They file paperwork. They work for the IRS. If you don't believe me, get audited and see how fast your CPA turns on you, because they work for the IRS. And they're not strategists. They're not specialists. They're looking at the past, filing the taxes. You look at the past, try to do the best you can, but really look towards the future. And I think I told you there was a guy called me on December 30. It was either December 31st or it was New Year's Eve. I don't remember. But I was in Costa Rica on an annual business shareholder meeting. And he's like, "What? I made $5 million last year. What do I do about my taxes?" And I'm like, "Nothing. You should have called me 6 months ago."
Yeah.
Not the day before, right? So I see what you do as an enrolled agent, which is different than a CPA. So explain to everybody that's listening or watching what an enrolled agent is.
Yeah, an enrolled agent is a federally recognized practitioner that can represent any taxpayer on any tax matter to any IRS office anywhere in the United States. So we're more of a sniper approach to tax as opposed to, CPA is a very well-rounded accounting education. Enrolled agent is all tax. Like that's what we do. That's what we learn. That's how we strategize and put plans together for our clients. So,
yeah. And that's what, if you listen to my past shows, I say, hey, have a CPA does your taxes, use an enrolled agent or an attorney to actually strategize. I learned that when I got audited in 2012, how fast my CPA turned on me. And fortunately, I had a tax attorney that was a paid sponsor of my radio show. And so he educated me a lot on how audits work and how to protect myself in the future. And ever since then, I have a CPA, but I don't even know their name, Jake. I honestly don't. I've never talked to them. I've never emailed them. I get a bill from them once a year. But I have a tax professional that does everything for me. But the CPA actually stamps it.
There you go.
And tell us something else. What else? What other cool stuff do you got for us today?
Man, we our company, we focus on working with small businesses, $1 million and under. That's really our sweet spot. But every once in a while, we get to do some cool one-off projects, and that's where the whole cool shit you can deduct thing came from. And so, we've done yachts. We've showed guys how to deduct $2 million yachts on their tax return, to the effect where it saved them like $700,000, which is enough to pay for the down payment on the yacht and the operating expenses for like 2 years. We're in the middle of a project now where a guy's buying a battleship. It's like the coolest freaking thing in the world, and literally, like, it's got guns on the top. It's a Coast Guard cutter ADAC that's out of commission. So the guy made it his life's mission to preserve it. And so we're helping him get it shipped across the world. It's over in Iraq. So he's going to sail it across the ocean, and we're going to park it at a marina here and turn it into a museum. A new one that just came across my desk is for all the car collectors out there. So did you know, and I can't think of his name, but there was a gentleman, I think it's Motor Enclave, something like that.
Yeah, it's Motor Enclave. Yep.
Mm-hmm. There's these new fancy car condos that are like popping up everywhere. In Texas, they're really popular. I think they're building one out by the Hard Rock Casino here in Tampa, actually.
There is. So that's his.
That's what we were talking about. So I need to get in touch with him. But did you know that through a valid nonprofit entity, through the federal government, licensed by the IRS, through the code section 501c3, you can have a classic car museum that legally has to be open 1 day per year, where people can come and attend and take a tour through the museum, and then that would entitle you to deduct not only the cost of the purchase of the museum, the build out, and then all of the cars that would go in it. So you start to think about that. It's pretty interesting when you look.
Can you drive the cars to make sure they stay lubricated?
As long as you were doing it for a specified business purpose, which everyone knows you can't leave your exotic or classic cars. You can't let them sit for too long. So absolutely, you'd have to have maintenance. You could even use them for straight up personal use if you prefer, as long as that was documented and everything was fully regulated. So that's one of the cooler projects we're working on right now.
There's one not too far from me. It's actually attached to the Caldwell, Idaho airport, where I keep my airplane.
Okay.
There's a condo there. In fact, speaking of cars, today I had my assistant go out and shovel the snow, because we had more snow in the last week here in Boise than we have had in 4 years. This is the first time I've ever shoveled snow here.
Wow.
And so I need to take the Ferrari out today to do a video. And so he's out there shoveling so I can get it out. The driveway's clean, but the street's not. So when I get done here, I'm going to go shoot a quick video in the Ferrari. You'll see snow everywhere. But, and of course I deduct the Ferrari, because of course you got to write that off, right?
There you go. and that's what we do too. We talk a lot to people about their hobbies and interests, which I can guarantee no CPA is going to ask you about that. They're very like, let's get to the point. And and I don't want to say we specialize, but a lot of times we can help people turn their hobbies or interests into a business. The IRS's definition of a business is an activity engaged in under the pursuit of a profit. And so the yacht that we did, like he bought it as a business asset. We had a business plan for it. It runs through a business bank account. We hired a captain and crew to man it. He had to buy it was like a 15 grand jet ski to go on the back. So when people rent it, they can be able to go and have fun on there.
Oh yeah.
And so it's really just thinking outside of the box. And you brought it up earlier about the audit, right? Because nobody wants to get audited. It's not fun, right?
Yeah.
If we weren't bald, it would account for a little bit more hair loss, But a big thing when you get audited is intent. What was your intent? And it's not the IRS's job to question whether you spent the money or not. It's their job to question your intent. So if, take our client, for example, if his intent was to purchase a yacht for a business purpose and it didn't make any money, that's none of their business. If his intent was to purchase it to defraud the federal government, that's a whole different story. So that's where we get into, I just had a conversation with a client the other day. He loves to go snowboarding with his kids. Once a year, they go out and do the thing in Montana or, wherever you go snowboarding. I'm from Florida. I don't even know. And I was like, dude, that's awesome. That's always been like my dream as my kids get older. I want to go take them and do a week in the mountains and stuff. I was like, tell me a little bit about it. He's like, man, my son is way into it. He's got the GoPro. He's got videos. He's actually got like 200 subscribers on his YouTube channel, which isn't a lot, but it's a start, right? And so we kind of just started picking it apart. How serious does he take it? Like, is that what he says he wants to do when he grows up? He's like, yeah, he's even got some of the other neighborhood kids have offered to like pay him to give him lessons and stuff. And I'm like, but that sounds like an activity engaged in for a profit to me. So
right.
As long as there's some sort of substance there, a lot of times there's very intriguing stuff that we can come up with, and a lot of people don't realize, they have these side hustles or side things that they do that they could, who knows, eventually turn into multi-million-dollar businesses, kind of like what you said of your story, or worst case, for a few years they provide some really good tax deductions while making memories with your family.
Yeah. I say this, I bet I say it every single day. Taxes are our biggest expense in life, and it's your responsibility and only your responsibility to correct it. It's not your CPA, it's not your tax professional, enrolled agent. It's your responsibility to figure it out, because nobody cares about your money as much as you do. And it's been my sport since I was a teenager. At 15 years old, I left home. I went to work for an entrepreneur, and he started teaching me about taxes at 15 and a half years old. And I would rather learn about taxes than watch a football game. I'm just weird like that. And I'm surprised I'm not in the tax profession like you.
Mm-hmm.
I kind of am, because I get to play with it and have fun with it, but I've never done it for a living. So how did you get into it? Were you like, you woke up at 3-4 years old and you're like, man, I'm going to be an enrolled agent when I grow up?
My dad got me a little thing of beans when I was young.
Okay.
No.
Started counting the beans.
I started counting the beans, No, it's kind of, it's funny you ask that, because a lot of people don't even, I'm a little different in this industry. I'm kind of an anomaly, if you will. And I have a sales background. I don't have a traditional accounting background. I'm not formally educated in this industry. I was in sales and sales management for 10 years at a Fortune 50 company. And I always had, I worked my W-2 job. I was really good at it. And I always had little side hustles. I always I sold everything under the roof. Under the sun. I sold roofs. I sold lasers. I sold Easter baskets, vacation packages. I mean, you name it. And one of those side gigs that I did, that I wasn't making any money, and I was sinking a small fortune into it. Honestly, I was like, signed up for this company, and I was going to trainings. I was flying around. I was doing meetings, trying to sell people, do all these kind of things. And I met a woman through that business who did my taxes, she said, "Hey, all that money you're spending, that's a deduction, right?" And I said, I had no idea, just kind of doing it for fun.
Mm-hmm.
And that year, I got the biggest tax refund I'd ever gotten in my life. And it was like, I remember I was jogging, I was out running. And when I saw the text came through and she told me how much it was, I like dropped my phone. It was like, oh my God,
Yeah.
So I was like, that's really interesting. Like, how does that work? And so she explained it to me. And then I saw like how much she charged me to do it. And I was like, that's interesting. Like, how does that part work? And that company, they had an in-house training program. They literally teach you enough to be dangerous and, go out and kind of hassle your friends and family to get them to,
Okay.
you do their tax return instead of them going to TurboTax, charge them a couple $100 and go from there. And I did it the first year. I literally did about like a dozen returns, nothing crazy, made a couple $1,000, and I kind of forgot about it, honestly, until the next tax season rolled around. And it's funny, like when things come at you in life, like I was not in a good headspace. I was going through a divorce. I was like drinking a lot. I was like not in the, I was not in the entrepreneurial, let's go start a business mindset. I was kind of at a low point. But all these people from the year before, like not only reached out to me, they like tracked me down and wouldn't leave me alone. They're like, dude, you're my tax guy. Like you got to do my taxes. And I'm like, it was a light bulb moment. It's like, I've been in sales my entire life and I've never quote unquote sold something where like the people come to me and not only come to me, like I'm trying to kick them off with a stick. I'm like, leave me alone, dude. I don't even do that anymore, Yeah. And so that was a big light bulb moment. That was the second year that I did taxes for people on a very simple level, just real easy 1040 stuff. And the third year, in my infinite wisdom, I decided to quit my job and go full time. And so I think that third year I did maybe 60 or 70 returns. I like literally just barely made enough money to survive for the year.
Okay.
And we've just compounded since then. I mean, the next year it was, I don't remember the exact numbers, but 150, then 300, and now. So that was 2016 when we started, I guess. 5 years later, I mean, we're a team of 17 people. We got CPAs, we got EAs, we got a full bookkeeping staff, full admin staff. We got more than 2,000 clients in a dozen states, and it just literally snowballed. So being open-minded and wanting to learn different things is really what got me into it. So
do you find that it's, in my world, as being a wealth strategist, that I'm constantly learning stuff every single day. Like it never stops. Do you find that with, the different law changes, and then you have to stay on top of it?
Oh yeah. So there's required CE requirements based on which license you obtain. But I mean, even just this last year is a perfect example. It's one of the things I liked about this business when I got into it is it's supposed to be very predictable, right? Every year, end of the year, you do your 1099s. March and April, you do your returns. Unless you extend, you do here. I mean, last year totally threw this entire industry on its head. There's the stimulus stuff, the PPP, the EIDL. They extended the deadline, so we didn't get the break that we all signed up when we got into this business for.
And the PPP is not taxable. Now it is taxable. It's not deductible. Now it is deductible.
There's still not a clear answer on that, honestly. I was just looking at a balance sheet earlier, and we're like, so it's 100%. And what I found, it's the craziest thing too, right? So you said always learning. Like, not only am I always learning, I'm always looking for a different way. I'm always looking for opportunity. For us and our company, the PPP was a really great way for us to connect with our biggest clients closer than we ever had before. And we personally walked them through the process. We introduced them to a new banker that could, a small local banker that could help them, because they had Wells Fargo and they ran out of money like 6 hours into the program. So it's like, for us, it was a tidal wave of activity, but we turned it into a positive. And then on top of that is the accounting and tax industry is flooded with, we'll say like, mature professionals who've been in it for 20 to 30 years. The last thing they want to do is learn all this new stuff and mess with it. And, it's like, so there's a huge opportunity. I mean, we acquired a company at the end of 2019. And then we actually just finished up another one, at the end of 2020. We just acquired another company too. As a retiring practitioner, been doing it for years, and all this crazy COVID stuff shut down here, there. It's like they don't want to mess with that, So once again, like in the chaos, there's extreme opportunity as long as you're willing to, as long as your wheels are turning the right way,
What do you think about, this is going to be brand new. I've never done this on a show.
Okay.
Like this. I used to do this all the time on my Your Credit Matters radio show, which was a live radio show on 42 different stations. I would do call-ins. What do you think about doing some call-ins, as in comments and questions via, see, we got people on Facebook right now, 4 different Facebook channels, and then 1 YouTube and then LinkedIn. What do you think about doing some, what can I write off Q&A?
Yeah, hit me with it. I love this kind of stuff.
All right. So if they pop up, I can see them on the right. We'll put them on the screen. So if you're watching right now on any of the social media platforms that we are live on, and you have a question for Jake regarding taxes, or if you have a question regarding credit for me, post your question. I'll bring it up. This is not going to bring you up for video unless you want to be on video. We could try that because there is a way to do it on video. The producer Chastity's behind the scenes. She can post the video link if you want to be on video with us. Otherwise, if you post your question, Jake and I will do our best to answer it. And if we can't, we might just make up some answer.
There we go.
All right. So Chastity just posted a couple of the links depending on what social media platform you're on. But if you click on that, you can join the call. We'll bring in, you can ask us live or just post your question there and we will answer that. So, you said earlier that when you did the tax returns, then you're drinking a little bit too much. Do you know a lot of people don't know you can write off alcohol?
Look at that. Meals and entertainment. And it's actually 100% deductible now too because of all the COVID stuff. Yeah.
Due to COVID. I say that every day. Due to COVID. You can write this off.
Absolutely.
Right? Yeah. And then I remember when I was a real estate agent, I owned a real estate brokerage firm. One of the things that I did, Jake, to get a lot of clients is every Friday afternoon at 11, I closed the office, as in we were no longer on our computers working. We put billboards and banners up flat, or not billboards and banners. We had like these open house signs, but it was like free barbecue. And so every Friday at noon, I offered a free barbecue, and anybody driving by, and there were thousands, probably 10,000 cars a day that would drive by my office in Colorado Springs. And at noon, people would come in and I'd have burgers. I would have buns and brats and beer. And my drink of choice was vodka. And I don't know
how many.
Right? Yeah, it still is. Right now, I'm on day 36 of 75 hard. So my favorite drink right now is water.
There you go.
But I don't know how many hundreds of thousands of dollars I made by free lunches. And what was really cool was part of that time I was homeless and I was actually sleeping in my office.
Wow.
And so the food that I didn't use, I ate for the rest of the week. And I got to write off my food, right? Because there was a time in there that I wasn't making any money. Once I got the thing rolling, I started making some money, but it was just that short little time. But we got a question here. I'm not even going to try to say your first name. I hate it when I don't hate it. People mispronounce my name all the time. So I don't want to mispronounce yours. So we're going to bring it up here. And it is, where'd he go? Oh, Mr. Spence says, can you write off leads you pay for?
Absolutely.
Yeah. So that's just marketing.
Yep.
So
very similar. Yeah. Not to go back, but similar to your event. That's a marketing event. So 100% the full cost of that is deductible. So
yeah, 100%. And correct me if I'm wrong, because I'm wrong and I'm wrong a lot and I'm okay being wrong.
Mm-hmm.
You can write off anything as long as your intention is to make money from it.
Absolutely. I wouldn't say anything, but very close.
Hey, I have a friend that used to write off $200,000 in hooker bills every month.
Is that marketing or is that
It
entertainment?
was client appreciation and client gifts. If you don't believe me, watch a little movie called The Wolf of Wall Street. Jordan Belfort is a friend of mine. And
Yeah.
there's that scene, his dad's like, $200,000, Jordan, on prostitutes? And he's like, what kind of prostitute takes American Express? He's like, the good ones, right? Not condoning that behavior. I'm just saying what Jordan Belfort did.
That's
So,
awesome.
crushing the 75 hard, man. I'm doing my best. I am sore like you would not believe. What was this one? Can I write off my new SUV? Oh, I love this. Now, he purchased it in 2018, but let's talk about it. Can I write off my new SUV this year that was purchased in 2018?
Absolutely.
Yep.
So it goes by the placed in service date, not the purchase date.
Bingo. So that SUV, Gerald, is it a full-size SUV, as in like a Tahoe, a Suburban, a Durango? Is it a full-size or a mini SUV? That's what I want to know, because let us know if it's a full-size. What kind of SUV? Because I think Jake is going to have some exciting news for you if you give us the right answer. So let us know what type of SUV that is.
I already know where you're going with this.
Yeah, you do.
Oh, yeah.
It is a Ford Expedition.
Ooh.
Jake, take it away.
There we go. So yeah, once they're over a certain size limit, you can deduct up to 100% of it in the first year if needed. So it all depends on your level of income and your long-term strategy. See, I think this is where we are a little different. Is the good news is you can deduct 100% of it in the first year of the total value, not just of like your down payment and what your payments are. If it's a $50,000 truck, you could potentially show like a $50,000 deduction for it the first year. However, you just want to make sure that falls in line with your long-term strategy of what's going to happen year 2, year 3, year 5, what happens when you trade it in. But the good news is, yeah, that could be a massive deduction for you.
Yeah, so my red truck that you guys see me in, the red GMC Denali, that retail on that was $84,000. I put $1,000 down via my American Express. I ordered it the day that I picked it up, and I signed that no money down except for the $1,000 deposit. Wasn't even a down payment. I got an $84,000 write-off that year, and I bought it like December 20th, 2018. So I got an $84,000 deduction that year. And how much money did it really take away from me? Zero, because I used the credit card, and the following month I made a payment. And so that's called Section 179 deduction. And what's the limit on that right now, Jake?
I want to say, don't quote me. I just want to say up to 50,000. Nah, it's higher than that. I got to polish up on that. But it is with the Tax Cuts and Jobs Act, they made some changes to it. But it's a healthy number. Let's say that.
Yeah, I believe it's 500,000. So not to correct you, it used to be $1 million under Bush, and then Obama dropped it down, and then Trump brought it back. I learned something yesterday, Jake. I'm looking at a Citation 7 that I'm going to purchase the next 2 years or so, and they're about $2 million, $3 million, somewhere in there. Mm-hmm. Do you know I can Section 179?
Absolutely.
I think it's up to $3 million on a jet.
Yep. So that was the yacht that we did. That fell into that, and $2 million was the cap on that, on luxury yacht, as long as they were purchased for a qualified business purpose, which chartering the yacht does fall under that. Just like, I don't know if you plan on chartering the plane or not.
Yeah, with Derek Warren.
Oh yeah.
So he told me if I buy it, he's like, you will literally have zero costs at all.
Yeah.
And then you got the jet, you get the $3 million write-off. You'll have no costs whatsoever, including your pilots. And then you just pay for gas when you use the plane.
So the craziest thing, so it's very similar to the yacht situation where it shows so there's a big difference between a tax loss and an operating loss. And what gets people audited and gets them in trouble is when they show an operating loss year after year after year after year. Depreciation is a paper loss. So that $1.9 million deduction that we got for that client, that goes aside from the actual operating expenses and income of the yacht itself. At the end of the day, the yacht, it actually makes a little bit of money. Not much. It barely pays for itself, but just like you said, it essentially covers the cost. And the client, he pays for it when he wants to go out and use it on his own. So
yeah. So the guy earlier, Gerald Gold, said he paid $84,000 on that expedition. So,
yeah,
what he's going to have to do is, and he's going to talk, Jake, he can talk with you. Let's put that up there real quick, and I'll put your link, and then I'm going to put this one on here. Marlon asked this: how to write off customary, ordinary, reasonable, and necessary. I'm not sure if that's a question or not.
Yeah.
Is that a
So
question?
is that, I guess that depends on if you're a W-2 employee or if you are do you have a small business, Marlon? Or are we talking, because they did make some changes where W-2 employees can't do itemized deductions. They're non-reimbursed employer expenses anymore. I think that's what you're referencing. If that is the case, my advice would be to start a small business on the side, and we could absolutely figure out some corn for you to deduct.
Okay, awesome. What's this one? I don't know. Do you know what the mileage rate is for 2020?
They change it back and forth all the time. I have no idea why. I think it's just to confuse us. It's either 53.5 or 54.5.
And it does change a lot.
Maybe it went to 51.5. It's never like a big change. It's just enough to, to kind of keep you on your toes.
My 22-year-old son works for me. How can I pay for his daycare on his new baby?
So he works for you. He's already on the payroll, I'm assuming.
That's what it looks like.
I would include that in his employer compensation, which you'll have to pay. Company would pay half the payroll tax. He would pay the other. But if you look, I have daycare, so I feel you're paying. Daycare is like $2,000 a month. So let's say you gave him a $24,000 raise to cover the cost of that. His savings is $2,000 a month. He's going to end up paying whatever 8% of 24,000 is. He'd be paying more like $2,000 for the year in the payroll taxes compared to the $24,000 of the actual cost, if that makes sense. Increases payroll basically, but
increases payroll. And look, it's a deduction for the business. If you're already helping them, then do it.
Yep.
Prior to this call, I met with an owner, and he's got about 35 employees, and we're going to set up a tax-free retirement account. We're eliminating his 401k program because his employees are getting ripped off like most people with 401ks. We're divorcing the government, converting their 401ks and IRAs to a tax-free retirement account. And by doing that, the CEO and owner of this company's got 2 kids. And he does a lot of social media marketing. And I said, hey, did you know that you can pay your kids about $500 per picture per post? So if you take 2 pictures a month per kid, post it on social media, you literally can take $24,000 out of your successful business, give it to the kids, and how much taxes do they pay on that, Jake?
Zero.
And how much deduction do you get?
$24,000.
$24,000 deduction, exactly. And then what I said was, let's take that $24,000 now and put it in your tax-free retirement account, which then will grow. And I did the math real quick. It's going to be like $250,000 per kid by age 18 that they can then use for college, for a business trip, or whatever.
I love that.
Yeah, it's pretty cool. Let's see if we got any more questions in here. And then speaking of that, you can put your kids on salary. You can do all kind of stuff. So let's talk about the putting your kids on salary.
Mm-hmm.
Tell me about that. What do we got on that?
So yeah, you can absolutely put them on a salary. So the standard deduction amount has been changed to $12,000. So if you're paying your dependents under the $12,000, essentially it can be a write-off to the business, and they're not even required to file a tax return. So they literally pay zero taxes on the money, and that's a really great strategy. And depending on the situation, this is a different one we're working on for a client actually. So he has all of his kids on payroll, but they're grown and doing their own thing. So we're looking at converting them from payroll to actually paying them as subcontractors, because then they could be taxed as an S corporation and save a great amount on the actual payroll taxes that they're having to pay. So
Yeah.
not trying to get too technical, but
yeah. And the payroll tax, just so you guys know, is 15%.
Yep.
For just right off the top for your Social Security. If you make over 40 grand a year, you're only getting a credit like 15% of what you put in goes towards your account, and the rest goes to private jets for Nancy Pelosi and haircuts for her.
That she gets to write off.
That she gets to write off. Yeah. Yeah. I learned that yesterday too. I did not know that. I knew it was a Ponzi scheme, like legally a Ponzi scheme. If you look up the definition of Ponzi scheme, that is what our Social Security system is. And I hate paying it, Jake. I absolutely hate it. You know, I spent almost 2 decades with the fire department, and I didn't pay Social Security. And then now as a business owner, I pay very little. I pay as little as I can possibly pay, you know.
Because you're not planning on depending on it, you know?
No, I'm not. You know, I pay what I legally have to pay, and I hate paying it. And it's ridiculous. But it is a way to save people 15% right off the top. So,
absolutely.
Jake, I appreciate you so much for being here with us.
Yeah, this was great.
I know. I mean, this is the busiest time of the year for you, is it not?
It is. But we've got an awesome team. So they're handling everything behind the scenes, and that frees me up to do this kind of stuff, which is what I love. So how do people get in touch with you, Jake? Best way is to go to www.jake360.com. It's jake360.com. It's my virtual business card site where it has links to all my contact info, social media. You can even click on there if you want, but it should be a pop-up to goes right to my calendar. So if anyone has questions, like the guy with the expedition or the payroll, I love chopping that kind of stuff up. You know, we'll spend some time with some of your listeners. You know, I can set some time aside on the calendar and do some strategy sessions with you guys. So
awesome. Thank you so much. So go to jake360.com. As always, you guys know I don't run any commercials on this show, so I'd appreciate a share, a thumbs up, a like, a post. Share it with your family. If you find value in the show, please share it on your social media platforms. Tune in for next week for some more information on wealth. It's called the School of Wealth. It's not just about money, but maybe next week I'll have a health strategist on the show to talk about how to get healthy. Jake, you're looking good. I look forward to seeing you here in a couple months in Florida. Thanks for coming on the show. Appreciate it.
Absolutely. Thanks, man.
All right. See ya.
All right. See you guys.